Hello and welcome to an episode of Monday Markets. As always, we are brought to you by Woo. Links available in the description below. I'm sorry if I sound ill. That's because I am. I don't know why I'm apologizing. I don't feel well. I'm the victim here. Nonetheless, sorry if the audio isn't up to par. But let's talk about the market. Up 7% on BTC. ETH underperforming. Alts caught a pretty good bounce. We are very, very close now to the launch and trading of the ETFs. Most speculation seems to center around a launch tomorrow, that is Tuesday, with trading potentially as early as Wednesday or Thursday. Some other predictions are Wednesday launch and trading later in the week or early next week, but we're basically here now. So most of our commentary, I think, if we're being reasonable, should focus on these slightly lower timeframes. The monthly isn't going to print anything terribly useful, at least until the monthly close. I think that's going to be a very interesting one to observe, to see if we manage to push all the way up to the range high for this month, or instead put in a wick of some sort around the monthly range midpoint at 44.47, and then have a rotation lower post ETF. So I think the monthly close, especially given that there are over 3 weeks left, is going to be useful because the news will be well out of the way by then, but at the moment, in terms of monthly levels, there isn't a lot going on. The weekly time frame is like moderately interesting. As you'll recall, we kind of went back and forth as to whether this weekly cluster was a particularly interesting level or not. That's where the market paused, at least for some weeks, but has broken out of it now. And last week's close was okay, it was decent. It was through the cluster, spiked some highs, but not the kind of market that is responsive to that type of price action. The potential good news, I suppose, is that there is a world in which if the market really pushes up from here, maybe into 50 plus, essentially, 50, 51, 52, there is a world in which this mini consolidation that we had between 41 and 43 is some form of future support. Now, for that to make sense, I think the market would have to go quite a lot higher for this level to be meaningful, but that's just something to bear in mind for the future. At the moment, other weekly levels, there isn't a lot on my radar. If we're going to get some sort of spiky, really aggressive rally into the ETF, the only rough area that I'm keeping tabs on is this former range high at around 51k, about above the 50k round number. You could be generous and just box out this whole pre-breakdown consolidation, but I'm not really looking for resistance levels per se. I mean, if it gets really crazy on the day of the ETF itself, that might be interesting. So again, it's one of those casual Friday moments where contextual levels are much more relevant than strict technical levels. But you know, this sort of mid 40s level, I think will very much depend on the flows and the reaction to the news, more so than outright technical levels. The daily time frame, excuse me, has been quite interesting. If we just look at how this rally has been playing out, we had a form of much more aggressive sort of diagonal consolidation on the march up from 30 to 38, and then post breakout we had a horizontal consolidation between sort of 44 and let's say 40. And there's nothing troubling in these structures at the moment, right? So this diagonal consolidation broke to the upside. This horizontal consolidation, you know, spiked a couple times, but ultimately broke to the upside. So if you're going to be very conservative, you should at least probably wait for daily, if you're really aggressive, 4 hour, but ideally daily shift in behavior and or market structure, which is to say something like a failed breakout or a break-in market structure or something of that nature. Up until this point, this has been quite orderly. So even this down day that we had here, we talked on Monday Markets how quarterly basis went from 40, 20% to 40% for no apparent reason whatsoever. That was just a lot of leverage, and the market ultimately ended up spiking that out. That got reset, and right after that flush, the market just kept marching higher. So that was nice, all the way back to the range low, but not enough to really threaten the trend that we've had so far. And on the 4 hour, it just basically shows what we discussed on the daily, consolidation breaking to the upside. Notice on this specific consolidation, given that we've already had one failed breakout attempt, if this breakout is going to continue higher, then this kind of gives you a new invalidation, essentially. Even if you're trend following or you're passively holding spot and letting the market go where it may before rebalancing, I think it's a good idea to just generally keep track of where market structure is and where the important range levels are, and at least mentally adjust your stop accordingly so you don't give back too much money. And on this occasion, given the structure we have in front of us, clear range, failed breakout attempt, leverage flush, and then another breakout. I mean, that looks pretty good. That's a pretty healthy construction. And at the very least, it gives you a new validation that, anything below 44.8 at this point would start to be suspicious. Absent that, it still looks pretty good higher time frame. Now, again, ETF news itself, I really don't know at this point how much the market is pricing it in. Obviously, my general view is that it's more priced in than not, especially considering, a multi-week or sort of 1 to 3 month time horizon. But in the short term, if sellers are going to sell at bad prices and get run over, that in itself, saying that I think the majority of it has been priced in, isn't an argument to take shorts in the middle of nowhere. So we'll see how that unfolds. I think, again, the monthly close will be instructive, and the sort of day of the ETF news and the 1 to 2 weeks after the formal listing, I think those time periods will be particularly instructive as far as technicals go. So let's keep tabs on that. ETH has been struggling still. So ETH BTC, understandably hard to keep up with BTC itself, especially as we're sort of in ETF spam on the timeline season. I will say that recently ETH sort of broke down from its local range below 0.52 rather. We held this for a couple of months, actually, given this is a weekly chart, sort of carved out a mini range at what looked like a larger range low, but that has broken to the downside now. I don't know. People have been fishing bottoms on this for so long, and the technicals just aren't lining up whatsoever. Perhaps, again, the argument is post-Bitcoin ETF, there'll be a rotation. I think we would have started to see some of that get front-run, and there's been no such evidence for the time being. So if you want to be conservative, maybe if it gets back inside this range, or ideally breaks weekly market structure and does something good in this consolidation, that would be a nice early start. Again, if you're swing trading, higher time frame, bigger picture, range low reclaim at 0.57 is sort of the bare minimum to even consider getting on board a trend reversal of a trend this long and this strong, but unchanged for the time being. USD is, it technically still looks okay, as we've discussed. The big breakout signal was the 1935 break. It was concerning at 2100, given how long it's spent there, but it kind of really hasn't gone anywhere since the breakout point. So 2100 broke, it went to a high of 2400 and hasn't exceeded that yet. And, that's not too surprising given the look of ETH BTC. ETH is still kind of being dragged up by BTC, as suggested by the ETH BTC pair. So if there's some sort of meaningful catch-up trade in this thing, ideally ETH BTC would show strength, and then ETH USD as a result would sort of accelerate the breakout, or at the very least sort of fill in this breakdown level, some of the sloppy selling at 2500, and potentially start trading within that old range of 2500 to 3300, 3400, all thereabouts. But for the time being, again, it's been the same story of the market being very early, months in some cases early to the ETH catch-up trade, and BTC has just been better. So I think some better evidence on this front would be welcome. Technically, the ETH USD pair still looks fine, but the standard is not, does it look fine? The standard is it outperforming BTC? And for the time being, this is still just moving sideways on the daily time frame, for example, whereas BTC has broken out of its daily range. So that tells that story rather vividly. Altcoins are catching a bounce. It's been curious to observe Arbitrum and OP and a couple of others. Essentially, the ETH trade, it feels like there's been some sort of leapfrog effect there, where people are thinking, well, if ETH is going to catch up, why should I buy ETH if I can just buy a ETH beta, essentially? And so they just pile in to the ETH-adjacent altcoins, if you will, instead of the asset itself. It's always a bit risky because, that type of reasoning can get you anywhere. For example, you're bullish BTC, which means you're bullish ETH because that's BTC beta, which means you're bullish Solana because that's Ethereum beta, which means you're bullish Bonk because that's Solana beta, which means you're bullish some meme coin NFT sub Bonk group because that's Bonk beta, so on and so forth. It just takes you to really dark places if you don't sort of moderate it at some point. But that's what the market's been doing, just skipped ETH entirely. Hence why Arbitrum and OP have been doing well. I think, and I almost promised this, this week we'll do an episode of Altcoin Thursdays because some of these setups look very interesting, especially with the vol of last week and the washout we had 20, 30, 40% in some cases. The recoveries have been non-trivial on a few of these. Arbitrum at its breakout level, a few of these look worse than others. It's a bit of a mixed bag in terms of how far the market retraced post breakout, but some of them still look fairly Dalai Lama-esque. So there's a lot to discuss on the altcoin front. Again, OP retesting its breakout level. Some of these newer ones just didn't really flinch from a market structure point of view and still look okay. Solana itself could do something. It's been a bit weak recently in this local downtrending structure, but I wouldn't write this off too early. What else have I got? TIA, STX, I mean, this is, again, even the Bitcoin-facing altcoins are doing well, which is some suggestion that BTC is still in the driver's seat, narratively speaking, and there's Uni, WorldCoin, so on and so forth. So I think we'll do an Altcoin Thursday episode. In general, we saw a big washout in altcoins when the market corrected, 20-30% across the board. Some really sort of scary looking moves on that day, but the reversion has been quite impressive in the short term. So we'll keep an eye out for those. I still generally think it's BTC news trade season. The market is just absolutely itching to put this trade on. The only bit of so-called wisdom that I've got is that if you're not a good news trader or you're not good at trading fast, volatile conditions, don't do it. If you are, or if you're new to it and want to experiment, the volatility is expected to be higher, and that's at least partially a function of liquidity being lower. So in those instances, I would reduce the leverage and let the volatility do the work for you. Because even if you make the directionally right call, like it's going to be released, it'll go up, it'll be denied, it'll go down, it'll be released, it'll go down, whatever, permutation of that, even if you guess it correctly, it just takes one big market order or one matching engine hiccup to get a 2, 3, 5, 7% wick before the meat of the move comes through, as the algos respond, manual traders respond, liquidations, all that kind of stuff. And that's all happening in a low liquidity environment. So it's very, very easy to just get wicked out, even if your trade idea is like fundamentally you get 9 out of 10 things right, but that one wick because your leverage is too high gets you. It's really, really not worth it. The whole point of these news events is you either just don't trade them at all, or you let the volatility do the heavy lifting for you, and sort of getting way too leveraged into them is generally not a good idea. There are some instances like an isolated margin position and just punting that and not exposing your whole collateral to it and letting your kind of liquidation be your stop where that can work. I'm generally not a fan of that type of stuff, but if you have to ask yourself those types of questions, then it's worth knowing what your maximum risk for this type of stuff is. And bear in mind, again, even if you put a stop market order in and some sort of protection, your fill price may absolutely suck. And in some cases, there may be such latency between where you put your stop and when it's actually executed that you end up losing significantly more than you planned. So normally, if you're going to news trade, you take your normal position sizes and just trim them a little bit, unless you've specifically got an edge around those events, be it for automation purpose in the sort of automation realm, latency realm, what have you. I still think zooming out a little bit post ETF is going to be a very useful time in the market. We'll have the monthly close and see if we can go to the range high, or if we get stuffed with a wick around the midpoint. I think that's going to be a good monthly close. We'll see in general what the appetite for these ETFs is like. There's a lot of speculation as far as how much they're being seeded with. There's a race to the bottom in terms of fees, and the inferences from that being that, well, look, their fees are so low, they're expecting huge AUMs. How much volume are these going to attract in general? The marketing that the ETF issuers are going to do and the knock-on effect that's going to have on retail and just BTC in general. And there's just a lot to look forward to and a lot of information and resolution finally to this long-standing narrative. So we'll see where we go from there. We can always cope and find other narratives to piggyback on BTC, which is what makes crypto so interesting. We just make something new up every time and it works, and I'm grateful for it. For example, after this, we can go for ETH ETF narrative. I'm sure there'll be Solana ETF narrative, halving narrative, rate cuts narrative, ETF issuer marketing, like all of this type of stuff is all coming, essentially. So that's going to be quite fun to look at. That's all from me. As you can tell, my voice has gone raspy as I am. Don't get liquidated on some stupid shit because of FOMO or just oversizing or doing things that are unwise. I genuinely believe that most people know when they are trading unwisely. It's almost a bit like dieting. Like, the average person who's not in the best health or not eating particularly well, there's no mystery when they have their average meal. If you were to ask them, is this healthy? It's not really a information asymmetry, more so than knowing, self-aware self-sabotage, or conscious self-sabotage to be precise. So tone down the leverage, let the vol do the work for you. The market isn't going anywhere. Lots of eyes on BTC in any case, and certainly on crypto with these ETFs. So survive and don't get wicked out on some dumb stuff. That's all from me. Hope you all have a wonderful ETF week. We'll tune in and catch up for the newsletter tomorrow, trletter.com, Don stream on Wednesday, and then maybe even Altcoin Thursday, and certainly Casual Friday. So hope that makes sense. Thanks for watching. Thank you to Woo for supporting the show. Links available in the description if you're looking for a centralized exchange and you're not from a restricted jurisdiction. Bye-bye.